Our next discussion will take a look at the auto industry, specifically money that was spent because of the bailout. Deepa Seetharatham, a Reuters correspondent, joins us from Detroit to talk about this. Good morning.
Good morning. How are you?
Fine, thank you. Ms. Seetharatham, there was a report from Treasury that takes a look at the money that we spent on the auto bailout and what possibly we could lose as far as federal dollars are concerned. Could you kind of encapsulate what that report said?
Sure. The Treasury report from last week said that expanded the loss estimate for the bailout to about $25 billion, $25.1 billion, which is an increase of around $3.4 billion from the previous estimate, which was at the end of February. And a lot of that comes down to two factors. One is the loss in value of GM's stock price, which is really one of the main driving factors of that loss estimate. And then secondly, the diminished value of Ally Financial. During the second quarter, its mortgage unit filed for bankruptcy, and the Treasury's estimate of what that investment is worth fell. It really comes down to GM's stock price, though, which has been hit by a variety of factors and falls far short of its IPO price.
When you take a look at the potential loss of $25 billion, what does that compare to as far as estimates going into providing money to the auto industry about what potentially we could lose?
Well, it's actually significantly better. I think initially the U.S. government had estimated something around a $44 billion loss on the overall bailout, which totaled about $80 billion, so over half. That was amended to around $30 billion at the end of 2009, but this new estimate isn't anywhere near as bullish as the estimates we saw last year in 2011, which went down as low as $14 billion. So it seems to ebb and flow with the fortunes and investor enthusiasm for GM stock price. So it IPO'd at $33 a share, and it's now somewhere around $22. And in order for the Treasury to break even on its investment, GM stock price has to get to $52, which is quite a hike.
As far as you talk about the stock price and its current state, could you talk about what's happening at GM that's causing the stock prices to be so low?
Sure. I mean, there are a couple of different factors, but of the most significance, it really comes down to three. And the first is Europe. GM has its Opel brand in Europe, which has been faltering for a dozen years. They've posted a dozen years of losses, and GM's very aware of some of these problems. In fact, earlier this quarter, Dan Akerson, the CEO of GM, actually replaced the head of Opel in an effort to turn around the brand much faster. In addition to the Opel risk, there's also pensions, which is the great legacy, one of these great legacy costs that GM really struggled with for decades. And GM has probably the largest pension plan of any company in the S&P 500 at this moment, with the pension obligation of $134 billion. And the company's done a lot of things in the past year to kind of undercut that risk and to move some of those obligations off its balance sheet, but it's not enough. It's still a really large pension obligation, and they have to make further inroads in mitigating that risk. And finally, there still seems to be a lot of doubt about whether or not GM's actually changed as a company, whether the cultural change has really seeped in and changed the company's bad practices. I mean, the bailout gave GM a balance sheet restructuring, a balance sheet makeover. But in terms of culture and in terms of how decisions are made and bureaucracy, GM still has a long way to go. And there seems to be a little bit of investor concern about whether Akerson and his lieutenants have really, spurred that change rapidly enough.
When you mean culture, does that mean decisions about what type of cars are built and how many are built and where they're built, or does it go further than that?
Yeah, exactly. And it also comes down to making decisions rapidly. How quickly is GM making these decisions? How many layers of command does something have to go through before it's decided? And whether GM has its priorities straight. One deal that GM made earlier this year that has really puzzled analysts and investors is an alliance with Peugeot in Europe. And GM said that this was a deal that would have allowed them to share product development costs with Peugeot. It's a French car maker in Europe that has kind of gone through the same struggles as every automaker in Europe has. But a lot of those savings you won't see until 2017, just 5 years out. And a lot of analysts and investors were puzzled by it because there seems to be more pressing issues happening now. And GM was opting for this long-term solution with Peugeot. And there are things like that that aren't being clearly articulated to Wall Street, deals like that aren't being clearly articulated that kind of knock confidence in GM and therefore its share price.
We're talking about the Treasury Department report looking at the auto bailout and could costing U.S. payers about $25 billion. Deepa Seetharatham from Reuters joins us from Detroit about for this discussion. If you want to ask her questions, the number is to call 202-737-0002 for Republicans, 202-737-0001 for Democrats, and 202-628-0205 for Independents. First call comes from Pahrump, Nevada. Janet, Republican line, good morning.
Good morning. I want to ask a woman that you was having, what does she think about? She think about Obama bragging about a bailout from GM. If there's going to be 25 billion bucks that we're not going to get back. We own 500 million stocks right now, and it's valued at $20, and it's going to be until we get our money back.
Okay, caller, Ms. Seetharatham, go ahead.
Sure, this is a great question, because the bailout has become real fodder for political debate, and with the Obama administration really taking credit for the bailout and calling it one of its kind of unmitigated successes, and the Romney campaign really criticizing it. And I think the caller brings up a really interesting point, which is GM's stock price has really foundered since its IPO, so since fall of 2010, and yeah, we are looking at a $25 billion loss. What's important to remember is that these loss estimates continuously fluctuate depending on the GM stock price, and we also want to, I think it's important to also weigh the White House response to this, which is that the bailout wasn't intended to make money for U.S. taxpayers. It was really intended to preserve jobs. The White House and the Center for Automotive Research both predict that about 1 million jobs were saved by the bailout. And so when you're weighing 1 million jobs versus a real risk to the economy, which is what bankruptcies of these two companies, GM and Chrysler, would have entailed during a recession, the White House thinks it was worth it. And so they really think about the 1 million jobs that were saved, and they say, well, then it's worth it, even though we will take a haircut. But the caller's right. We're definitely taking a haircut. GM, the Treasury still owns 500 million shares. They wanted to exit by now. That doesn't seem to be practical given where the stock price is. They're looking to maximize returns to the extent possible, but we will always be looking at a loss.
Off of Twitter, a question about the sales of the Volt and how that's going.
Well, the sales of the Volt, this is the vehicle, the plug-in hybrid that sort of became the centerpiece of GM's IPO offering a couple of years ago. I don't actually have the exact figures of the sales of the Volt, but last year they fell short of expectations. It's hard with vehicles like the plug-in, like the Volt, which embraces a new kind of technology. Americans have been kind of slow to adopt this technology. EVs and hybrids are still significantly expensive because of battery costs, and they're out of the reach of most Americans. And when they seem to ebb and flow with fuel prices, and so it's unpredictable. Earlier this year, GM kind of refrained from giving too many expectations on the volt because they got burned last year. I think they fell short they sold less than half of what they had predicted in 2011. So this year, it's hard to say how they're going because we don't have a full year estimate or a full year outlook to compare it to. But the fact that GM fell short last year and has refrained from giving any kind of outlook this year on sales of the Volt indicates that they're starting to see that this is still a burgeoning area for sales, and EVs and hybrids are always going to be a little tricky to sell and a little tricky to sell to the American public. We're really in the early innings of this particular trend.
Thomas in Connecticut on our Democrats line. John, go ahead.
Hi. Back around 10 years ago, I read an article in Barron's about how the outcome of a pre-arranged bankruptcy with the United States government would be. And I purchased at their recommendation some General Motors preferred P stock. The long and short of it is, this stock was a hybrid stock, and it paid. The American taxpayers did get the shaft. I agree with the previous caller. The Congress got paid back 100% on their purchases when they read this article, and they were right on the money. Barron's knew exactly what was going to happen, and what happened was that this was a hybrid. It was really a debt instrument, and debt was supposed to be wiped out. Stockholders were supposed to be wiped out. Everybody but the unions got wiped out. However, that's not true, and I would expect that there would be an examination and investigation of how this could have happened when certain few people, like myself, who do their homework, really got the shaft.
Ms. Sitharaman, go ahead.
What the caller's experience is unfortunately really common across the board. A lot of people lost a lot of money, and that is a hallmark of this particular bailout, at least from the White House perspective, is that the pain was really shared around, across the board. The caller brings up that everybody but the unions, seem to really get the short end of the stick this time around, and this is a pretty common perspective, and we hear it a lot. But as far as unions and the automakers and a lot of people on the task force, say that this isn't necessarily true. The unions did take a lot of concessions that, they almost, to the extent that they almost balked at the deal. I mean, this was some of these choices they had to make were really tough. We were talking about the elimination of the closure of factories and the loss of jobs, and the elimination of the jobs bank, which is probably one of the most significant concessions that the UAW had to make during the bailout talks, which is a policy that enabled workers to get 95% of their pay indefinitely if they were idled. But I understand the caller's anger. I think that it's widespread, and there's a lot of people who lost a lot of money. And currently, there are actually a lot of people that are very frustrated because they bought into GM's IPO at $33 a share, or they bought early on, and they're seeing the value of those shares really underwater. So this anger that he's expressing and is very common, and it's valid, and a lot of people share it.
$80 billion spent rescuing GM and Chrysler. The Treasury Department again forecasting a potential loss of $25 billion. The U.S. currently holds about 500 million shares of GM stock, and no sales of U.S. stock shares are planned before the November election. This is King George, Virginia. Kenny on our independent line.
Yeah, I'd like to first say I really love to watch C-SPAN on the weekend mornings. It's sometimes the highlight of my weekend, but I'll have to make a comment about the last session you had about immigration. I've never seen an issue double teamed from one side like that. I would think that, is MSNBC taking over this network or what? Let's not do this again, please. Thank you.
You have a question for our guest? No, he doesn't. Detroit, Michigan. This is a retired auto union employee. Bill, hello.
Hello. Good morning. Thanks
Hi.
for taking my call. I have a question for you, but I'd like to make two comments. First comment was about the Volt. I worked at that plant, retired from there in 2008. The government forced them to push that thing out too fast. GM's on track with that. I know they are. Second comment, thank America for taking care of my pension. I appreciate it. I think the steel workers of America and a bunch of others would appreciate some help too, but they definitely didn't get none. They didn't have no political power, I guess. One thing, question. They offer bailouts to the salary workers at Ford on the pensions and GM. Do you think they're going to do it with the hourly workers?
Yeah. Yes, I do. In the last contract round in 2011, the one that ended just about a year ago, actually, there is a side letter in the GM contract, which opens the possibility of a discussion between the union and GM about ways to eliminate their pension obligation to hourly workers. The caller is talking a lot about pension buyouts that were initiated at both Ford and GM earlier this year. The pension problem, as I had mentioned earlier, is an extraordinary issue for both GM, Ford, really for all three, GM, Ford, and Chrysler. But GM and Ford have been in the news recently. It's just to offer one sort of staggering statistic, with the 15-year stretch that ended in 2006, GM put $55 billion into workers' pensions plans and only paid something around $13 billion in dividends. So it's true that GM's pension risk is far and away the largest of any company in the S&P, like I said earlier. But earlier this year, both GM and Ford have made significant inroads in trying to get this pension risk off the table. The way GM did it with salaried workers, which is the white-collar workers, engineers, and the like, was by shifting something like $26 billion of those obligations over to Prudential and offering buyouts to about 42,000 of those salaried retirees. In all, about 118,000 retirees and their dependents were affected by that move. They'll still get monthly paychecks or pension checks, but they'll be from Prudential, not GM. Now, on the hourly side, the workers represented by the UAW represent the lion's share of GM's pension risk. That's 440,000 people, just like the caller, that get monthly pension checks from GM. And it's a sensitive issue because workers came to GM and joined GM because they thought they would be protected for life. A lot of them didn't go to college because a lot of them decided not to take other opportunities because they were promised lifetime of security by GM and Ford. And so the idea of now, 30 plus years later, having to being asked to forego that right and forego that promise it's tough to swallow for a lot of people. So but at the same time, these companies have a responsibility to investors to manage the company in a way that's fair and intelligent. And the pension risk is, as I mentioned earlier in our conversation, is probably one of the top risks to GM stock. So the side letter that was in the contract last year between GM and the UAW, this letter doesn't exist in the Ford and the Chrysler contracts as far as I remember. I'm happy to be corrected if I'm wrong. But this side letter opens the possibility, a discussion that there could be buyouts. My understanding is that GM retirees represented by the UAW would absolutely not go for this. But it is a discussion that has to be had, and Dan Akerson said as much in recent months, I believe at the annual shareholder meeting, that this is something that they would like to do. Steve Ratner, the former head of the U.S. Autos Task Force, said the same thing, that this is something that would be a smart thing for the UAW to consider. So it's definitely in the ether, and it is a conversation that that's to come in years to come.
Off of Twitter, this is Emma saying, if Treasury wants to give away $25 billion, give it to the people. Spending creates demand. Consumers are the real job creators. Jan Ness this morning also off of Twitter says all the speculation about what would or wouldn't have happened with or without the stimulus is fruitless. Here is Sealy, Texas. Mark is on our Republican line. Go ahead, please.
Yes, my name is Mark Young. Back in December, I actually signed up to run for Congress. I withdrew on March 8th because of the redistricting debacle we went through down here. But I actually was my retirement plan. I actually had some investment in the what they call it, debentures for GM. We got in low. We got out. I actually sold out of everything whenever after we went through the 2-year holding period or whatever it was. When they finally issued stock to us, I got out as soon as I could because I recognized having the government in there was bad. Now, one of the concerns I have is the whole priority system we have in bankruptcy today. One of the problems we have is, yes, they put retirement preferentially first for the workers for that particular corporation. The problem we have is that most of the common shareholders that were wiped out in this thing were actually from people holding it in their retirement plans. So what we're getting is we're seeing a preference for the actual workers for the corporation, in this case the UAW workers who were through their excessive demands for wages and not lack of concessions prior to the bankruptcy actually drove the company into that position.
Caller, thank you. Ms. Seetharathnam, go ahead.
Again, I mean, this is emblematic of the kind of anger that we hear from a lot of different people about their investments in the bailout, and particularly the feeling that the union really was given preferential treatment. It's a contentious issue, and a lot of people share it. But again, I would say that it's the common, I guess, the sort of the consensus among analysts and people who track this is that the union alone didn't bring these companies into bankruptcy. It wasn't the union alone. There's also issues of quality of the vehicles that we're selling, which no matter what kind of labor agreement you have, if you're not selling quality vehicles, you're not going to be successful. That seems to be a pretty kind of common thread among the analysts that we speak to regularly. But this issue that the union really got favorable treatment Pedro, is a really common one, and it's one that angers a lot of people. And I would just reiterate what I said earlier, was that the union did take, some steep concessions. But, at the end of the day, they're the workers that build the vehicles. And I think the Auto Task Force had felt a responsibility to make sure that they were that there was respect for that, and there was respect for the fact that the UAW workers actually build the vehicles and work in the factories. So there are no easy choices here, and there are no right answers. There's a lot of anger, though, and it's very common, and calls like one we just had and one previously really are emblematic of that.
Our guest is Deepa Seetharathnam from Reuters, joining us out of Detroit to talk about the auto industry and potential losses by U.S. investors in GM and others to the cost of about $25 billion. Detroit, Michigan, Pam, Independent Line. Hello.
Yes. Good morning. Don't cut me off. I'm calling. First, I'd like to thank Obama for helping save the auto, and then it's more jobs that were lost besides working for the big three, because my husband he didn't work at the big three, but he's a high-low driver, and his job was saved because of that. And then other jobs down the line were saved because of that. But they did make a lot of concessions. He had to give up some of his health care benefits. His pay was lowered by like $5 to $6. And he lost vacation time. And then plus this started under the Bush administration, and he had no strings attached. And I think he first gave $7 or even anywhere between $7 to $25 billion to start the program.
So, caller, we're running short on time. So, what's the question?
Okay, mine was just the comment to say that I thank Obama for it, and that it started under Bush. Thank you.
Thank you. Ms. Seetharam, off of Twitter, a question, is GM running the company or the government? I'd like to use it to ask, how much government influence does GM still see? And, do they still get visits or consult with the federal government about how their business is doing?
GM says that the Obama administration doesn't weigh in on business decisions, and so that's what we hear, and that's what we hear regularly. This week, GM put in a bid for Ally Financial's international operations in an effort to sort of expand their ability to finance vehicles and around the world. And this was reiterated again by sources that. Again, the Treasury really played no role in GM's decision to bid on Ally. And that's a unique deal in and of itself, because Ally was one of the companies that was recipient of nearly $17 billion in bailout money in 2009. And the proceeds of the sale of these international operations will go to pay back the U.S. taxpayer. And that GM is in the running creates sort of this ironic twist.
Pittsburgh,
in terms of government influence, yeah.
Pittsburgh, Pennsylvania. Andrew on a Republican line.
Yes. My question is, what right does, and what's the history and what's the right of the U.S. government being able to buy private industry and spending U.S. tax dollars to buy these industries and then losing billions of dollars in them, like GM, and end up having us on the hook for this money over long term, and then ending up having us owe billions of dollars to them, and the companies end up losing money in the long run and end up having us owe money, and the taxpayers ended up losing this stimulus money over the long term?
I can't say I'm familiar with the historical precedent of bailouts in the U.S. government's history, but I think the magnitude of this particular package is unprecedented. Again, I'm happy to be corrected on that. I think that in this case, the losses were always expected, but it was weighed against, the White House weighed this against the fact that a million plus jobs would be preserved. And that is what they take as a success. The fact that the loss of those million jobs in 2009 during the depths of the recession would have been extremely damaging to the U.S. economy. It would have hurt any progress that could have been made. And I think the bankruptcies were seen as a necessary evil. I don't get the sense that the Obama administration wanted to do this. I don't think anyone wanted to have to bail out Detroit. But that's what had to have. That's what had to happen in order for there to be economic stability at that juncture. And since then, you've seen all three of the U.S. automakers really make inroads and improve. And they've steadied themselves financially. They're pulling profits. They've added 250,000 jobs since June 2009. And I think, it's a question of jobs versus money, and the money is real, the loss is real, and it's something to be concerned about. But the White House and a lot of other pundits believe that when balanced against the jobs saved, it was worth it.
What's the differences between what's going on at GM and what's going on at Chrysler?
Well, the bailout packages at GM and Chrysler were sharply different. GM got cash. But Chrysler was laden with debt, $7.6 billion in loans from the U.S. and Canadian governments. And the capital structure, that matters because Chrysler was paying a pretty exorbitant interest rate on those loans, which was when they were coming out of bankruptcy in their first couple of years, really undercut their ability to post profits. And so as a result of that, as a result of the fact that they didn't have the kind of balance sheet restructuring that GM saw, Chrysler had to make changes much, much faster. And Chrysler had to cut even deeper. Every executive there seems to have about 3 or 4 jobs. They work 7 days a week. And I'm not to say that GM executives don't work hard, but at Chrysler there was they had a gun to their head, and whereas GM with its cash didn't necessarily have that incentive to change as rapidly. But I don't doubt for a second that GM feels the pressure, especially now that their stock price is in the 20s, far short of their IPO price and the 52 break-even level.
This is Christian on our Democrats line from Port Clinton, Ohio.
Hi. I hear this $25 billion loss, and again, this loss it would only occur if GM or if the government were to cash in the stock early. Again, we're reinvesting in America in one of the worst financial crises that we had in a long time. This is going to take time to get that money back. But you consider, like you said, millions of jobs that were lost. You're talking millions of employees that pay state, local tax to support our schools, to support our property taxes, homes. People would have lost homes. You're talking huge losses. $25 billion is nothing compared to about if they would have had to take $135 billion pension over in the government, that $135 billion in pension guarantee would have been way worse than $25 billion. We're reinvesting again in America, and that it's going to take a little time. But that $25 billion is nothing compared to the billions of dollars that would have been lost.
Yeah, I think that's an important point. The caller makes an extremely important point, which is that these losses at the moment are theoretical. The U.S. government hasn't cashed in its GM shares, those 500 million GM shares. The value of an IPO of Ally Financial is still sort of it's not imminent. They're still working on cashing out of Ally. They own about 75%, 74% of Ally. So at the moment, it's theoretical. And like I said, the value of those loss estimates seems to contract and expand depending on investors' enthusiasm for GM shares. So it is theoretical, and his point that we're investing in the U.S. economy and that we're investing in industry is an important one as well. I think a couple of years ago, the Center for Automotive Research put an estimate of how much they thought a lack of bailout would have cost the U.S., and they came to a figure of something around $27 billion. That's 2 years ago. I'm not really sure if they've updated that figure, but $27 billion and over $1 million lost, or sorry, over a billion jobs lost. I mean, that's what we're weighing this against, a $25 billion theoretical loss at the moment against the very real loss of $27 billion and over 1 million jobs.
Deepa Seetharathan, is there an indefinite amount of time that we can hold on to these shares, or do we have to let go of them by a certain point?
I don't think doesn't seem to be a timeline. There seems the Obama administration, I think, initially wanted to be out by now. They wanted to be out by the next presidential election. That's clearly not going to happen. And so for the moment, Treasury is publicly saying that we will sell shares when it is in order to maximize shareholder returns and as soon as practicable. So that time hasn't come yet.
Here is Hamden, Connecticut. Joanne, Independent Line.
Hi. Yeah, my comment is that, number one, he gave this money to unions in the auto industry, which obviously is going to be laundered and then given back to him as donations. So that's who he helped. Number two, we're supporting this industry, so basically the only reason that they're successful is because of our money. And then thirdly, he's going around saying that GM was number one, when actually the only reason it was number one for about 6 months is because of the tsunami, and the Japanese had to shut down the Toyota plants. Now that the plants are open, Toyota is actually number one. So he's very misleading, and he's lying to the American people as far as saying that he saved the auto industry.
Right. As for the caller's second point, I think Detroit would agree with you that the only reason why GM and Chrysler are still around is because of the American taxpayer. That's unequivocally true, and everyone at GM and everyone at Chrysler is very, very aware of that, and from what and really grateful for that. And I think there is, so absolutely the American taxpayer, the reason why GM and Chrysler are still around is because of the American taxpayer. That can't be disputed. As for the other point that GM, if we're touting the fact that GM is the world's largest automaker, the caller's actually making a fair point there as well. I mean, Toyota was hit. A lot of Toyota's production facilities where they made cars were hit by the tsunami, and they simply couldn't make cars to meet demand last year. And so GM's position as by some estimates, as the world's largest automaker, is fortified and helped by Toyota's market share losses last year. How it plays out this year is going to be interesting. The tally of the world's largest automaker is a complicated one, and there isn't a unified way to calculate that. So it tends to be debatable.
Liz Smith off of Twitter says that Ford proved that they did not need a bailout to succeed.
Yeah. Ford is an interesting case. This is a company that I cover. Ford is an interesting case because they hit their crisis point well before the other two. During the last, if you look at articles from not last year's contract round, but the one 4 years before that, everyone refers to Ford as the weakest of the Detroit Three, which I think really shows you how within 4 years they went from weakest to the strongest of the Detroit Three, so very rapidly. And the reason why Ford didn't need a bailout is because they were able to, at the end of 2006, take over $23 billion in loans, called a home improvement loan, in order to execute a turnaround plan, the One Ford turnaround plan under Alan Mulally. I mean, this is a Ford 2+ years later when they were when they went to Washington and asked for a bailout, but they were able to actually look at the figures and realize they didn't need that money the way that GM and Chrysler did. So Ford was able to, you're right, Ford was able to do this, but that's because they hit the crisis point so much earlier than the other two. And the other important thing to remember here too is that Ford does have federal money in the form of Department of Energy loans. And over $5.6 billion in Department of Energy loans that have enabled the company to really develop fuel-efficient vehicles. So it didn't take a bailout, but it does have federal funds. And so just want to make sure that that point is understood.
So was there anything else from the Treasury Department report that was released this week that was worth noting aside from what we've talked about?
Well, I think we really hit the highlights. I mean, it's GM's stock price, it's the uncertainty about the Ally investment, and all of that contributes to a wider loss estimate. But I would just really reiterate that this, at the moment, is a theoretical loss, and that it is something that is constantly fluctuating. And so only when GM actually only when Treasury actually sells those 500 million shares, will we know the extent to which we've lost money.
Did GM have a response to the release of the report?
I think GM is very aware. No, GM is really aware of the fact that its share price has a lot of work to do, and it's something that Dan Ackerson has asked, and CFO has asked, Dan Ammann has asked at every quarterly earnings and annual report, and they always say the same thing. They're very concerned about it, and they're looking to work on it. And that's why they're working on things at Opal. That's why they're making some of these moves with the pension, and that's why they are trying to show investors that they are initiating cultural change.
Is there a different tone now than what in the auto industry there in Detroit than what we saw in 2009?
Absolutely. We have hope now. And in 2009, there was real concern and fear. And I think in Detroit, it's absolutely, everyone is it's night and day. I mean, people are there's a recognition that there are a lot of challenges in terms of management and execution, and there are a lot of changes that need to be made, and occasionally there's some frustration that these changes aren't being made rapidly, but there's a real feeling that that there are companies to change, and I think there is a lot of optimism about what can be done in the future.
Deepa Seetharatham is with Reuters. She serves as a correspondent covering the auto industry and the Ford company specifically, and joins us from Detroit. Thank you so much.
Thank you for having me.